Good morning or good afternoon, depending where you are. My name is Becca Rowland and I'm a partner at Midas Aviation, and I'm going to be moderating today's webinar. Welcome. With me today, we've got John Grant, who's a senior analyst at OEG, and he joins us as usual with all his insight and conversation. And we have Mark Clarkson, who's EVP of Product Management. This week, we're going to be focusing in particular on the complex task of recovery for legacy carriers. As we go through, please do ask questions using the chat box at the side, and we'll try to answer as many as we can as we move through the webinar, and hopefully we'll have some time at the end for questions too. We are recording the event and we'll be emailing everybody who's attending afterwards with the recording. So welcome. Let's start with you, John. We look at this data every week. I think we're in week 27, is it now? As Deirdre, who usually moderates this, reminds us. We're seeing a continuation of the capacity picking up, but it's nothing dramatic this week, is it? Where are the things we should be looking for? Where are the highlights from the last week in terms of airline capacity?
Sure. Hi. Thanks, Becca. Good morning, everyone. Good afternoon if you're in Asia. It's slowing down in terms of the recovery, but we are still seeing growth week on week. Another couple of million seats added to the global pot in the last 7 days, which of course is very welcome. And some markets, as we will see later, are very close, if not actually ahead of the amount of capacity they had this time last year.
Oh, that's a first, isn't it?
It is a first. So yep. So week 27, as Deirdre would call it, is memorable for that, if nothing else. But we are still seeing many markets languish, and particularly some of those that actually aren't on this chart in any great detail. So Africa, you can see, is at -67. So we only got 1/3 of the usual capacity we would expect compared to this time last year. And there are some parts of Africa, particularly South Africa and Southern Africa, where capacity is still almost negligible compared to last year. Europe has been quite positive in the last couple of weeks. You can see that we're still just at 38% of usual levels of capacity, but some markets have seen very significant capacity rebounds in the last 4 weeks. Spain is an example, a 400% increase in capacity to over 1 million seats a week in the space of 1 month.
I guess that shows just how timely the opening up of some of the European travel markets and reducing those restrictions at the beginning of July. That was really timely and really needed.
Absolutely, and of course, that 1 million seats in Spain has an impact in markets such as Germany, the United Kingdom, and France, where we're seeing capacity coming back quite strongly as well. So that's good. I think some of the frustrations that we're going to see continue to be around those international markets where international services are the largest proportion of their capacity. So, for example, in Latin America, whilst Brazil has a very large domestic network, and Peru has a reasonable domestic network, the rest of Latin America is essentially international to international capacity. And lockdowns, quarantines, ongoing restrictions are frustrating that demand. Similarly in Southwest Pacific, which is Australia and New Zealand and a couple of Polynesian islands, the ongoing lockdown, the announcement last week from Qantas that they do not intend to operate international services on a scheduled basis before March 2021 indicates that we're probably not going to move much further than that 62% point we have at the moment in terms of fewer flights. So it's I think the lines, if you smooth them out just a little bit, Becca, I think the lines tell the story. We've clearly plateaued. We've picked up a little bit in terms of capacity. but we're treading water at the moment, and I think the biggest worry is not capacity but demand.
That's right, and in some ways the capacity increases are a sort of suck it and see approach, aren't they, to see if the demand is there. But I know that Singapore Airlines, I saw reported a 12% load factor in June, and I looked at the US TSA data yesterday, and they were showing passenger numbers at about 26%, 27% of where they were last year. So, passenger numbers are long way below.
And that TSA number has flatlined as a percentage. If you take out the 4th of July weekend, that 26% has been sort of where the numbers have been pitched for probably 2 or 3 weeks now. And there's a suggestion, of course, with the COVID spikes on the west coast and the south coast of the United States, that we could actually see a reduction in demand in the next couple of weeks as well. School holidays are coming to an end soon in the US as well.
Yeah. Okay, let's move on and have a look at the next slide we've got. This is showing number of flights, so not seats, it's capacity in terms of flights. And the different yellow lines show how the schedule looked go through to the end of August by week at various points over the last few weeks, with the thickest yellow line being the capacity, the schedule this week. And what we see is week by week, frequencies just being taken out of the schedule through that peak August period. We knew this was coming. We've been saying for weeks, for months, that this is what was going to happen, but it's quite stark, isn't it, seeing it there, John?
It is, and it's one of those things that you don't like to sort of say, we told you so, but it's inevitable. Airlines are struggling to understand market behavior and demand. All of their historic data points are no longer valid. They're using Google search and other such sites to try and determine any assessment of demand, frequently reverting to just gut feeling of what may or may not move. But I think the really interesting thing, Becca, is the behavior by different markets. So if you look in North America, for example, generally the US carriers seem as though they've actually planned ahead quite well. Partly, I think, because they're protected by the CARES Act. So they have that sort of blanket wrapped around them that allows them to plan through to the end of September, at least in terms of capacity. But other parts of the world, like Europe, we're seeing behavior by some airlines that is just very strange, literally cutting 1/3 of their planned operation 4 weeks before scheduled departure times. And of course, they're leaving those flights on sale. They would say because they're hoping to generate demand and see revenue recovery. Others might say it's because they like issuing vouchers for travel at a later date, but that would be for someone else to say. I think it's a fascinating picture. And I think one of the concerning things I've started to notice is if you look further out into the winter season, we are already seeing airlines who are planning to operate no more than half of their winter 2019-20 programs. So airlines are beginning to bunker down for this winter and are not expecting to see any significant recovery, at least in capacity, from where they are now. Obviously, there's plenty of empty seats that still need to be filled anyway.
Yeah. So looking at this slide we've got in front of us here, is your expectation that bottom line, the thicker yellow line, is going to flatten out? We're going to see in the next week, next 2 weeks, we're going to see it really come down a bit further.
I think there is some more to come out. There's no doubt about that. It is going to smooth out a little bit. There is still quite a steady climb in there from the 27th of July to the 3rd of August, and I think that may smooth out just a little, particularly in Western Europe, where I think a lot of that capacity is currently on offer. So yes, I do. I certainly don't expect it to decline significantly in the next couple of weeks unless there's a big spike somewhere and further lockdowns are imposed. But I guess, from an airline perspective, most governments now at last are beginning to think and say publicly, at least, that if they do require lockdowns, they will be on a much more managed and controlled and regionalized basis than a complete country lockdown. So
yeah, so it's going to be very disruptive still, but actually we're sort of beginning to get the measure of how we operate in this environment, it seems.
Yeah, and I think if we look to the end of, I know this goes through to the end of August, but if we went through to the end of October, I think we would probably be at between 55 and 60% of previous capacity year on year, and demand maybe 20 percentage points below that mark. So it's going to be a particularly soft third quarter for the airlines. Mark,
Soft seems to be an understatement, I think.
Well, I was trying to use investor terminology. Mark, I don't know what you think.
I think it's getting to that stage where we're on the kind of cliff edge a little bit. I mean, your picture about what the airlines are planning now for the winter, and those in many cases are, should we say, the best prepared, or hesitate to say best protected, but they've maybe kind of got their deals sorted out, and they've got some sort of visibility on their sustainability over that winter period. I think the kind of unknown just now is what it's going to mean for the longer tail of airlines that, as you've said before, and we've talked about, they haven't banked their cash obviously in the busier summer period, and just what is the picture going to look like going through the winter. I think it's going to be very, very challenging.
And to answer a question from Mahanath, the other real factor we need to build into this is much of this recovery continues to be in the domestic market. Domestic capacity last week grew by 4% compared to just 2% in international capacity. Domestic yields typically are probably half of what you would get for an international passenger. So those passengers that are actually being carried are generating per seat probably less revenue than we were seeing in previous years.
Okay, let's move on. And you alluded earlier to the fact that we are seeing one or two markets with something slightly more positive. What we've got here is domestic markets in China, South Korea, Vietnam, Japan. Some interesting numbers here. We're seeing capacity by week this year and also last year. China we've talked about a lot, haven't we? And the fact that the domestic market has recovered in a much more robust way. But this week we actually caught up with where it was last year. Quite remarkable, really.
We did. It's strange to get a text from someone on a Sunday morning full of excitement saying, I can't believe it, some domestic markets are bigger than last year. Not naming anyone, Becca, but
we are geeks after all.
we are. You are a geek. Yes. So it is very interesting. China is back to where it was in terms of domestic capacity, and we have seen some data around load factors that suggest that most of the major carriers are operating in the mid 65 to 68% range, which is pretty good. No idea what the yields are, probably horrendous, and traffic is being created. But South Korea is back, Japan is back, and the one that is just stunning is Vietnam, where not only is domestic capacity back, but it's back above last year's levels. Now, when we entered COVID-19, Vietnam's domestic market was extremely strong and extremely buoyant. There was more low-cost capacity being added, new entrants coming into the market, new airport pairs being created. But to actually get above where we were in January at this moment in time, and reflecting on the point that there is no international connectivity to those domestic markets, there is clearly a lot of seats, and you'd have to question whether load factors are all that strong. And the Japanese situation, I think, is fascinating because suddenly Japan Airlines added back 30,000 domestic seats this week, which is interesting in the context of they've lagged significantly behind All Nippon Airways during the last few months, but they have maintained a higher dispatch reliability of their services. They haven't cancelled as many flights as ANA have, who were up to 30% cancellation rates in some weeks. And now Japan Airlines have put that capacity back. Much of it is from Tokyo Haneda, and it will be interesting to see what their cancellation rate is like in the next couple of weeks, whether they've put that capacity back because they feel they need to compete with ANA, and they've accepted they may just cancel a few more flights just to remain competitive. So
and this business of cancelling flights, we've talked about that before, haven't we? It's on, Japan is, in some ways quite unique, but they have these very high frequency markets, don't they, where it is possible to schedule quite a number of flights and you can cancel quite a few and the passengers still can get another flight within an hour or within 30 minutes or so on, isn't it?
Yeah, I mean, they run more flights than Southwest trains do to Waterloo, I think, but it is really high frequency, and not just high frequency. I was looking at some numbers for a blog that we're putting out this week. It's also extremely high density aircraft as well. The blog I'm writing is on the 747, and I just had completely forgotten that Japan Airlines operated that 747 in a 553 seat economy configuration on their domestic networks. So, they're using big aircraft, high density, and lots of frequency.
Right. Now, before we go into the focus of today's webinar was going to be on legacy carriers. And before we move on to that, I just wanted to mention that OAG has been tracking what's been happening with capacity in this sort of way on its website every week since early March. This week, we are changing the way that works a bit. We've got a recovery tracker that looks a bit different. It's a bit interactive. And that, I've been told, has just gone live today. So that will be updated again every week. So do keep checking in with the OAG website and looking at the recovery tracker over the coming weeks and months. So to move on and look at the legacy carriers, we've got a slide coming up here. So very busy. We've got a few slides that look the same. So shall I talk you through what it's going to look like, or do you want to explain, John, what we're seeing here? This was your idea, wasn't it, to try and understand how reliant the legacy airlines are on some key markets and what happens when travel restrictions, international travel restrictions, mean that they're not really available to earn revenue on.
Absolutely. I'll start, but by all means chip in, Becca, and if anyone's struggling with the concept, then drop us a question. We'll try to help you as well.
Absolutely.
So we've been looking at this, and the whole issue for us as we've looked at the data in the last couple of weeks is just why are the legacy airlines not opening up capacity as quickly as some of their direct local competitors, and our thinking and really we were struggling to understand just why it just didn't seem, they were missing the early opportunity to get back into the market. So we looked at a basket of legacy airlines, and clearly they have much more complex international networks with a much higher dependency in many cases on international to international connectivity, and we've talked about that on many occasions from all of the perspectives around airports, handling, transfer times, etc., etc. But we thought we'd look in a bit more detail at the revenue that these airlines are generating on a country pair basis. Now, a country pair basis is, for example, a traffic flow from the United Kingdom to the United States. But it could also be something as obscure as a traffic flow from Bangladesh to Mexico, where American Airlines, for instance, are the dominant airline who fly the longest sector on that route. So if you look at American Airlines revenue for 2019, you can see that 69% of their 69% of their revenues are generated from their domestic network, which is perhaps not surprising. It's huge, it's very large, and of course all of that revenue and all of that opportunity is still open to them today. The domestic market is completely open.
And that's why we've seen some of those carriers with large domestic markets afforded a little bit of protection, haven't they? They've been able to continue operating. We've been talking about that for weeks now, haven't we?
Yeah, absolutely. So, you know, that they can operate those, and it's just a matter of if there's any demand for those particular flights. Probably not at the same level as before. So then when we look at the international markets, there are those markets that are still open and for which traffic flows can be created and revenues generated. But also there are a large proportion where there is a restriction on travel, either at both ends of the route or just one end of the route. So it could be something such as a complete lockdown in a particular country. It could be a requirement for a 14-day quarantine after arrival, which we know is just not acceptable to most people, and they therefore are not traveling. You have to have a really special requirement to travel if you want to accept a 14-day lockdown. So then we identified all of those international flows for American Airlines where there is a restriction in place. And Becca, we found 19.
Well, no, we've identified the ones where there's a restriction just on the top 20 country pairs. There's no, frustratingly, there's no comprehensive list about listing, you know, what flows are possible and what aren't. So we took the top 20 for each of these airlines. So for American Airlines, obviously there'll be the US to UK, US to Mexico, and so on, and looked at which of those were restricted, which we counted as passengers can't really travel in either direction, so completely restricted. The traffic is completely limited. And then we called all the others open, and that's just the top 20 revenue earning country pairs. The other international here, shown as the 10%, are the other revenue earning country pairs for which we haven't done that piece of analysis. So some of those, many will be restricted and some will be open.
So having completed that, and you know, Becca's absolutely right, it is an arduous task of saying, is that right, is that market open? Yes, no, completely restricted, semi-restricted, etc. We identified from our data that American Airlines generate revenue on 918 different country pairs. So that could, as I say, could be anything from Peru to the United Kingdom, or from Japan to Mexico, but there are 1,918 different country pairs on which they generated some revenue in 2019. So the top 20 countries is just a mathematic calculation. 20 divided by 918, 2% of their country pairs from which they generated revenue are restricted in one way or other. But that 2% accounts for 67% of the international revenue that American Airlines generate. So there is a hugely disproportionate impact on their revenues from those top 20 country pairs. There's a network planner, Mark. Go on, Mark.
Sorry, I was just going to say, I mean, is it arguable then that that sort of ratio, the 2% representing 67%, some of those markets, even within the top 20, are somewhat dependent on each other as well? So, I don't know, yeah, US, UK is probably somewhat reliant on US to other points, other countries in Europe, just because of the connectivity. So it's kind of almost even more dominated within the 2% than just obviously spread across.
Absolutely. I mean, you know, in any number, there's always that 80-20 rule, isn't there? So in the 2%, there's selected country pairs that will be even more dominant, particularly the UK, United States, I think. But if you're a network planner sitting in Dallas for American Airlines, you must look at this and think, how on earth do I work my way through this? And where can I fly? And where can I expect to generate revenues? And that is, that is just one legacy carrier. And you can then see for Japan Airlines, clearly not so many international pairs, but the top 20 country pairs account for 11%, and those top 20 country pairs account for 85% of the international revenues that they generate. And clearly large proportions of that will be Japan to China, Japan to South Korea, and perhaps Japan, Singapore, and Japan, United States. But it's from a perspective of understanding why, I think this gives a great insight as to exactly why legacy airlines are struggling to rebuild and come back out.
Yeah, and it's interesting with Japan that, the top 20 country pairs that I looked at, there were restrictions basically on every single one. So, the chances are that many of those other international country pairs were included, including here, will also be restricted. So, pardon me, the ability to earn any sort of international traffic revenue, the markets just aren't available for the airline to start thinking about serving them. So it's very difficult situation, isn't it?
And it's, I'm sure it's as frustrating for them as it is for anyone looking at this and a shareholder and thinking, why are you not back in the market? What are you seeing that no one else is seeing? Other airlines are putting capacity back and you're not. Are you, what's your strategy? And their strategy is we can't. Some of our major flows are just still not available to us. And it just makes no sense for them to start returning capacity. But it also highlights how the world has changed, and those airlines that we said right at the beginning who have domestic networks and focus on point-to-point traffic are so much better placed to come through the other side of COVID-19. And we're seeing that now as they grow back out.
We've got a question from Paul Berg just saying of the top 20 country pairs for America and how many are open or restricted. He's commenting that it's not clear. It isn't clear, Paul, because we've tried to focus here on how valuable these country pairs are to the airline rather than just how many there are, because obviously what's clear from this is that some of the country pairs earn masses more revenue for the airline. So we've done this as percentages of revenue rather than the number, but by all means contact us afterwards and we could send you some of that information.
Drop me a note on LinkedIn and I'll put you in touch with Becca, and she'll be delighted to count every one of them for you.
Yes, I can show you my spreadsheet. Okay, let's have a look at the same sort of information. We've got a couple of different carriers. We've got Lufthansa and British Airways. These are paired up here because quite a similar situation. Neither have very much domestic traffic relative to the international. And so, as we saw before, on the right, the red and the dark orange is the proportion of revenue coming from those top 20 country pair markets. The plain orange, the other international, we haven't done the split as to what is restricted and what isn't. But if it was the same proportion, goodness, that's an awful lot of their market that just isn't available to them. And it does go a long way to really understanding why a British Airways is so much slower to come back than an EasyJet or a Ryanair.
Well, it may be because BA are more interested in trying to sort out their employee disputes. But who knows? But I mean, you look at
leave them alone for a week, John. Come on.
Yes, I think we've given BA a hard time.
Yeah, Becca, you just look at this and you think this is just staggering in terms of the exposure these airlines have to international flows, and you just for an airline, just its top 20 country pairs is just 1%. Then in the case of BA, clearly it shows that, you know, they're very successful at generating revenues across many international pairs. But for 56% of your revenue to be exposed or influenced by that 1%, shows, I guess, how globally dependent we have become as an aviation community on generating revenues from all around the world, and similarly for Lufthansa. But it's really frustrating, and we've said before, you know, for both BA and Lufthansa, the closure of the transatlantic market, or the effective closure of the transatlantic market, is worth $46 million a day in revenue for airlines that's not being generated at the moment. So it's a really, really complex, and for them must be frustrating position.
Yeah, and as Amanda's asked, you know, will we see the pivot to freight as a revenue stream? And that's exactly what we've seen to some extent, isn't it? Some of these airlines have been looking for freight opportunities, and certainly at the beginning of the pandemic, there were a number of freight opportunities. And John and I were involved in the Africa Tomorrow virtual conference yesterday, and heard a very interesting discussion about freight and where the opportunities were, but you have to be quite fast moving, and it's you know, one market opens up and then it's another, and you've got to be quite flexible to deal with that, haven't you?
Yeah, I mean, freight cargo is much more dynamic. You know, it doesn't always go to Heathrow, for instance. It tends to, in many cases, use secondary airports because of the ease of access. And of course, what we saw in terms of that freight pickup and those yields in March and April, which were sometimes 6 times higher than normal market rates, was just a function of the urgency to get PPE into particular countries. And now a lot more of that is moving on ship. There's a bit more planning taking place, etc., etc. So that, you know, that cargo market has essentially begun to evaporate as well.
But it can't replace this scale of passenger revenue, can it?
Absolutely not. Absolutely not. You know, and some airlines are better placed with their aircraft types and their fleets to accommodate cargo than others as well. So, you know, the A380 is, for example, a very big passenger aircraft, but a very, very small cargo aircraft compared to some of its competitors.
Mark, were you going to come in there with a comment?
Yeah, just you know, in relation to the, you know, the picture for Lufthansa and British Airways as opposed to American and forgive me, I think was it JAL? Yeah. We're obviously showing here that, you know, domestic revenues 5% and 2% for these guys, but how much of that is underpinned by the international connectivity from those services? We're not necessarily showing. It's just the kind of the difference of that picture for these guys. It's, yes, there's much lower in terms of domestic revenue, but actually those domestic services are underpinning many of those international markets for them.
Yeah, yeah. Okay, we've got one more of these slides to have a look at, and this is Emirates and Cathay. So these are airlines obviously without a domestic market. A large chunk of each of these bar charts on the left is the orange, where we haven't done the analysis of what's restricted and what's open. They're operating, it would seem, if we look at the top 20 country pairs, there are more markets perhaps that are available to them, but it's still a good chunk of their market is just not accessible. And we've talked before, haven't we, about the difficulty that airlines like Emirates and Cathay are going to have, where they have no domestic market at all.
No, absolutely, and you know, sitting with in a case of Emirates, a very high dependency on 6 freedom traffic flows. You know, that's clearly a big issue for them, because they've got to pivot their network and try and balance capacity on either side of Dubai, which is challenging. And of course, at the moment for Cathay, it's in many cases their future and their expected recovery is so linked to the opening of China for international flights once again. And as we know, China is particularly stringent on what it will and will not allow to operate in the coming months. I think it's the only country in the world that's introduced a penalty point system whereby if you bring inbound passengers who have COVID-19, then you get a yellow card, then you get a red card, and essentially they cut frequency and restrict you back to previous levels of operation. So for Cathay, it's a very, very difficult situation. And for Emirates, whilst half of their world might be open, the other half is still in some way or other restricted. So,
Yeah.
but the whole picture, I think, is just fascinating as to how dependent all of these airlines have become on these international traffic flows.
Okay, so let's move on. And another way to look at some of these legacy carriers, we're going to look at some of the OAG forward bookings data. So we've now got data for June where we can see the bookings going forward, and this is the unadjusted bookings data. So what we've done here is we've compared the picture in May with a picture in June and showed the level of bookings for each month through to October. So we can see between May and June just how many more bookings were added, or in some cases there was a net reduction. So this is global. Mark, you're really interested to encourage people to use this bookings data, aren't you, to understand how the future's looking and be able to, it's a good tool for planning ahead.
Yeah, I think so. I would just say it's the future booking data we have is it's an aggregation of GDS booking data. So naturally in some low cost, for example, dominated markets, it may not give you a great picture, but on a global basis, or certainly most country level basis, it gives you a good indicator. And I think we've always kind of obviously used schedules data in this way, and we've used historic traffic data to help customers answer questions about future demand. But by now bringing through these snapshots, so you can also go back in time and look forward from that point in time, I think it gives us a better view on how we think that future capacity or future demand is going to be realised. So as we'll see in some of the visuals, we can start to understand, well, capacity may be at 25% of what it was last year for the next 3 months, but actually the demand is only 5% of what it was, and therefore can we make some decisions about whether or not that capacity or that level of frequency is going to be achieved. So I think it's added a lot of granularity and colour there for our customers.
Yeah, we've titled this slide "Global Supply Following Demand," and it's quite difficult in these times to fully understand whether demand's following supply or supply's following demand or whatever. But I think this, to me, seemed to confirm that we have a situation where supply is now following demand. So on the left, the snapshot, which I'm finding really useful. I'm loving the new snapshot feature in Traffic Analyzer. The grey line is the May snapshot, and we can see between May and June, bookings rose through June, a little bit in July, but there's no net increase in bookings through August, September, October. And as a result, I would say we've seen this capacity coming out on the right-hand side. The yellow line is lower than the others. So really, it's putting the two together is quite valuable, but quite concerning that we're not seeing a net increase in bookings for August, September, October. Maybe that's understandable in May, early June. We're still, I took the, it's understandable in that there wasn't a lot of movement. We were still very much in the middle of the pandemic through May, but you'd think there would be a bit of increase.
Well, I think you're right, Becca, but when I look at this, I see two events that really have driven the yellow line. The first is the US opening up for travel earlier than other markets, and perhaps now seeing the consequences of that. But there was an undoubted spurt in bookings and passenger demand in the US market, the domestic market, for a couple of weeks, maybe even a month or two. And then, of course, late July and August, what we're seeing here is the net result, and there will have been literally hundreds of thousands of passengers who will have made bookings earlier in the year for travel across the transatlantic market in particular in both directions that will have had to cancel them because of the point we made earlier about lockdowns and travel restrictions. So it doesn't in some ways surprise me that we see a little change, and underneath all of that, of course, there will be some churn and some individual dynamics taking place.
So we've got a similar slide here where we look at North America, Asia, and Southwest Pacific. Again, looking at those bookings data between May and June. Interesting things happening here. We're seeing in the top right corner, John, just what you said, large numbers of bookings in North America, aren't we? And they did take, spread through into August and a bit into September.
They did, but this in many ways highlights one of the variables that we really don't have a clear understanding on yet. We suspect that in those markets that have reopened, we are seeing a demand spike where people have gone stir crazy and are looking to travel and get out as quickly as they possibly can. And a number of bookings more than there were this time last year because there's more capacity available and prices are probably pretty sharp at this moment in time. And then we're seeing that demand slip back as people almost bunker back down again. And I think that in part explains what we see in Asia as well, where, for June, we've got more traffic. Mark?
I think, no, it's just, yeah, it's just, I guess, but your previous point as well about the I guess the challenge is understanding how much of that is pent-up demand and therefore new bookings as opposed to bookings that were in the system but get pushed back and people are traveling. So how much of it is net?
Yeah. We wouldn't be on this call if we had the answer, I can tell you that. Doing something else.
There's a question, I guess, of what's net new and what's existing and getting pushed out. But yeah, we can speculate and draw our own conclusions, I guess.
But back
and bookings year over year, though, I mean, that we've added on here in these little grey boxes, for Asia, the actual bookings for July is still only 10% of where we saw a year ago. So, whatever the trends are month to month, actually we have to remember that absolute booking levels are still way down on a year ago.
But put this in the context of, the airlines and network planners who, in normal times, will have just returned from filing their winter 2021 slots. Of course, slots don't matter now, but when you look at this and it's the confidence. Sorry, Mark?
The summer 21 slots. Yeah.
Summer 21 slots. You're in a position where you're thinking, what confidence can I have? What is going to recover? And we're now beginning to see discussion taking place that where we thought, oh, it's okay, everything will be back by 2022, and the last month perhaps we've been looking and saying, well, it could be 2023. I don't want to be the bearer of bad news, but in some cases there's a growing sort of school of thought that this could actually linger through to 2024 before we really see a full recovery. And by a full recovery, we don't just mean demand, but demand at the same types of yields we were seeing in 2019.
Yeah, I think we had a question come in actually from Gerald Ong exactly on that. What's the longer term view of recovery, especially in the light of recent ACI Europe forecast pushback to 2024? So 2024 to reach the 2019 levels. So if I don't think 4 months ago we'd have been saying, oh, this would go to 2024. I think we were looking at 2021, 2022, but it's quite remarkable, isn't it?
I think when you're in the middle of something like this, you just don't, it's just human nature to hope it's not going to be quite as bad as it actually is going to be. But the reality is it does look like it could stretch that far, and even more importantly, the fragile cash reserves of airlines are going to be extremely thin for the next few years if that is the case. Yeah. So let's, we should maybe speculate about consolidation, different partnerships, all sorts of things happening.
Is that one of the challenges actually that, let's say it's going to take 4 or 5 years to get back to 2019 levels, for example. Arguably that's going to be through a period of significant consolidation, and therefore, you know, maybe pent up demand again, because there are fewer airlines who are effectively controlling that market, and, you know, I wouldn't say gouging the market, but we've got numerous examples over the last 20 years where, you know, the pricing and dominance of airlines has given rise to sort of disruption in the market. But how challenging is that going to be in the next 3-4 years when all the existing carriers have gone through that pain to then, I mean, what is the opportunity going to be for new carriers entering markets in three years' time when the domination of the existing players is maybe that much higher already?
Well, I think,
see that.
Yeah, it's a good question. I mean, clearly, you know, 51% of the world's commercial fleet is currently grounded. So there's plenty of aircraft available. We know there's plenty of crews, and, you know, there's airport capacity in most markets now, and likely to be so for the coming years. But gaining a foothold for a new airline is going to be extremely difficult. Those airlines, and particularly the legacy airlines that are operating, and, you know, you're going to see operating in the next couple of years, I suspect that they will be adjusting the mix of capacity and the configurations of their aircraft. You know, I can't, part of the reason for BA dropping the 747 at the weekend is, you know, it had, one of the aircraft has an 86-seat business class, and corporate demand is going to be the last sector to recover. Therefore, you don't need 86 business class seats where you're effectively going to be turning business away or buying business at low yield. So, you know, it plays right to the sweet spot of the 787 and the 350. Smaller aircraft, smaller business class cabins, more efficient operation. So I think it will be interesting, Mark, to see how that does play out.
Yes, it's increasingly looking like we'll see some sort of structural change, I guess, with the airlines. You know, in some ways the barriers to entry for new airlines are perhaps as low as they've been in a very long time. But as you say, the market dominance of a few carriers may make it hard to get any foothold.
But absolutely, but, you know, in adversity is opportunity, and Ryanair's much vaunted 737 order the week after 9/11 as an example of, you know, if you've got the cash or you see the vision and you go for it, you can make a huge dent into a marketplace and secure a competitive advantage.
Okay, I wanted to move on quickly. We're eating through the time we have here. One more slide in this series. These three pictures are less positive. We're not really seeing any growth between May and June of the bookings here, and we deliberately haven't shown Europe here because the opening of the European market happened on the 1st of July and will have distorted things. We know that, but that is worth looking at Europe once we have the data that shows what happened with bookings once people knew they could travel within Europe. So not looking great for any of these markets at the moment, is it, John?
No, it's not. I mean, you look at Africa, and clearly the almost zero levels of capacity in Southern Africa, reflecting the amount of bookings that are being taken, but it's not a good picture in any of these markets at the moment. So again, it just plays to that whole 2023-24 type.
We wanted to show a couple of similar slides, but for specific legacy carriers as well. So we've got British Airways here. I know, John, we weren't trying to encourage you to talk about British Airways, but maybe, I don't know if Mark wants to speak to this one. So what we've shown on the left is BA's international bookings, the shorter haul routes, the under 3,000 kilometres, and the bookings for routes over, which are actually larger in absolute terms, and then the capacity changes on the right-hand side. So I guess this is what you're talking about, John. The bookings coming down between May and June is actually some of those bookings that were in the system already and just being pushed back or refunded or whatever.
Yeah, it is, and, you know, I think I understand the scale of the challenge, but what we have noticed in European airlines is a much shorter window into which they cancel. So if you look at BA's capacity filed at, you know, the midpoint of each month, you can see there is a systematic 1 month in advance we take the capacity down, 1 month in advance we take the capacity down, and at the moment it looks like each month they're taking out 2/3 of their capacity. Now people are looking at those reservations that they may have and saying, well, you know, we all know you can't go to the United States on the 1st of September because it's still going to be in lockdown. There's no indication it's getting any better. Why don't you just cancel the flights? Why don't you just come clean and make it easier for everyone, rather than just keep that capacity in the system? Because it's highly unlikely that those flights are going to operate. So, you know, the US carriers have managed to do that. Is there a reason why we can't do that amongst the European airlines?
Yeah, so our next slide is American, and really just because that gives us, it shows us that visually that, you know, on the right hand side, the way capacity is being amended just looks more reasonable, doesn't it? It looks a bit more realistic.
It does, and you know, I completely accept the point that a carrier like American, US domiciled, protected in some part by the CARES Act, has been able to get an earlier grip, a bit more visibility about perhaps what it does want to operate, whereas others are waiting. But they do seem to have looked a little bit further out than some of their competitors in Europe. And to that point I made earlier about winter 2020, 2021 capacity, all of the major US carriers have a very similar reduction in capacity for this coming winter compared to last winter, suggesting that, you know, they've all started to look at it and have begun to cut out what they think is not going to be required. But and you can see the difference in Americans' network between their domestic and international quite clearly as well, can't you? The spike that we mentioned, and yet international bookings unadjusted, coming down. Yeah, it's I guess it's what we would expect to see given how close we've become to the data in the last 27 weeks.
I think we've got, just looking at the British Airways one very briefly, we had the uptick showing in October for the long haul bookings, if you like. And as much as, you know, BA been adjusting each month, you know, that spike in bookings is going to have to go somewhere. So they've probably got a chunk of refunds and a chunk of vouchers that they're going to have to start thinking about in the next month or so for that uptick in the kind of probably winter sun destinations.
Yeah. And we've got one more of these charts. So this is Lufthansa, quite a different capacity picture here, really. They've taken out capacity all the way through to October.
Absolutely. So if you look at October to the end of October, I mean they're planning about 3.7, 3.8 million seats compared to, I think it was just over 15. So they've taken them out. They've just got 1/5, 20% of their capacity, and you compare that to the slide we had with BA, you know, who still have a lot more capacity in the system, 100% of it essentially. So again, you know, Lufthansa are clearly getting ahead of the game and beginning to plan out. And
that certainly gives the travellers, the prospective Lufthansa flyers, a bit more certainty, doesn't it?
Absolutely. And, you know, to some of the slides we've got that are just coming up, you know, we are seeing those airlines that are planning out and are retrenching to a core program are actually delivering a core program. Whereas ultimately, you know, you almost have to ask yourself the question, is it worth having for those airlines who still have lots of seats in for September and October? Is it worth having those in? Because ultimately you're going to have to carry the administrative burden of rebooking, refunding, voucher issue, whatever it happens to be. You know, if the consumer knows you've got a core product, they've got more confidence.
Just as a very quick question there, John, for someone like Lufthansa, is there a revenue management angle to this as well that maybe, and just complete speculation, systems that they have, you know, if we pull out so much of the capacity and let that 20% of capacity, if you like, let that build in a sort of more normal revenue management yield structure, and then we can see what's coming through and add more back in, having already potentially banked some of those bookings at maybe a higher
yield, yeah,
higher class, yeah. Just
Yeah, no, it's a good point, Mark.
Wild speculation, but look
no,
here.
Yeah, no, I think it's a good point, and you're probably right. And of course, we know that nearly every airline in the world has got spare capacity, and what aircraft they are utilising are not being maximised. So, are you better to build back up and out, or are you better to have it all in and then cut? Two very different strategies, and maybe this one gives a better option if you're playing the revenue management parameters as well, because you can squeeze your booking classes, maybe get another 5% on the yield, which is crucial, of course.
Sure.
We've got one more airline to look at in this series, and that's Emirates. So, it's interesting. All four of these we've looked at here, we've seen quite different sort of strategy, really, to how they're managing capacity over the coming months. In this instance, obviously, Emirates capacity went to pretty much zero, and then they're building it back in. It looks perhaps a bit more realistic for the next few months, but what do you think, John and Mark? Are we going to see the same here in September, October? That's unrealistic?
I think Mark, after you.
But clearly,
No, I was just going to say,
bookings are building. The bookings may be lower than they were in May, but the bookings are building as we go through the year. We're not seeing bookings, they're higher in September and October now than they are for July and August. There is growth there.
I think it's to John's point about, hopefully for Emirates, the sixth freedom traffic, and just plainly the balance of those markets opening up on a geographic basis. So, if all of the markets that are easing restrictions are east of Dubai, it's not going to be very helpful for Emirates. But I think this probably reflects that there's a reasonable balance of markets opening up, and as long as that balance is maintained or extends, then no reason to see why Emirates won't actually fulfill this additional capacity and the demand that's underpinning it.
I could say I do agree with Mark. I think the biggest challenge for Emirates is going to be that the A380's got to come back into their operation in a big way at some point, because they are so heavily reliant upon the aircraft type. I mean, they've started Heathrow, they've started Paris again, but I did see last week, they were originally planning to come back in August with 3 a day on Gatwick. That's back down to 1. They were going to do 2 on Manchester. That's back down to 1. Stansted is 1 a day compared to 2 a day. So, I think we may see some more capacity coming out, but this is an airline that in some ways is hampered by the size of the equipment it has. And I know people out there may say, well, it's not that higher density aircraft. And you're absolutely right. It doesn't have a lot of seats on it, but it doesn't have a lot of seats because what seats it does have, a large proportion are in business class, and the corporate travellers yet to return.
And if you really want to make a hub effective, you want high frequencies coming in. You want those hub waves, don't you? And if you go from 3 flights a day to 1, you've sort of lost that, haven't you? You've lost the ability to provide.
You have. I mean, I think travellers are more accepting of longer layovers and connecting times at this moment in time. At this moment, but there is an optimum
do you think so? Do they want to? Do people want to wait in an airport environment for?
Well, that's exactly what I was going to say. That's exactly what I was going to say, Becca. There is an optimum point where over perhaps 3.5, 4 hours, you begin to think, oh, I don't want to be exposed to, an international community that may or may not have some COVID-19 element in it. Yeah.
Yeah, very tricky. Okay, let's move on. We have just a few slides, slightly different tack here. We're going to look at some of our data we've been showing each week with flights operated and cancelled. This is AirAsia. So we've seen them come back, having for a while not operated anything, coming back in quite a small way, but it seems to be consistent. We're not seeing a lot of cancellations. Sort of a step in the right direction, isn't it?
It is, and you got lots of adverse publicity about AirAsia in the last couple of weeks, but let's not forget how they have so dramatically changed aviation in the Asian market, and the pioneers in places where, you know, the markets were previously so regulated. So let's hope that it all does turn around and become successful. But they are actually generally operating what they are scheduled to operate. We've seen very little cancellations, and I think this is what we're now beginning to see. Those airlines who are now coming back and beginning to put more capacity into the market have a better feel and a greater understanding of what is sustainable and commercially operational, and, you know, is going to cover its DOCs. And we've seen few cancellations from AirAsia, which is what they need to rebuild that confidence, I think.
Yeah, and we've seen a bit of the next slide. We've got one for it, same sort of picture for Indigo. A few more cancellations, but again, just steadily building the network, a reasonable degree of consistency here. We've seen a bit of churn in the India market with some sort of false starts in the last couple of months, but this looks positive for one of the world's larger markets, doesn't it?
It does, and, you know, there's a long way to go. And sadly, Indigo announced that they need to shed about 10% of their employee base over the weekend. But they're, again, a carrier that, you know, when they first came back, if you look at these two very big yellow spikes just towards the third week of May, that's when they thought they were allowed to start, and they couldn't because the government locked down again. But you can see they've got a grip of their operation, and the majority of flights are now operating, which is exactly the confidence we need to start rebuilding.
Okay, and just because we're so excited by the Vietnam story, we've added in Vietnam Airlines here, just showing how dramatically capacities increased. Quite a number of cancellations, but actually many of those flights operating as planned. Quite remarkable.
It is remarkable, and I can't say I'm surprised by those level of cancellations, because, you know, we know 20% of the domestic demand is built on the back of an international connection. So if that international connection's not there, then you know, that traffic's not there. So no surprise about that, but I think it's just staggering. I mean, you know, they are frequently, Vietnam and Taiwan are frequently cited as best case responses to COVID-19, and from an aviation perspective, it looks like they're beginning to see some of the benefits of that in those numbers.
Yeah, well, we're just about up with our hour. Is there any final insights, John or Mark, that you'd like to share with our audience? It's been great having you here today, but are there any things you feel you wanted to say that you haven't said yet?
No, just I think maybe this week's one to reflect upon the sad demise of the 747, which seems to be falling rapidly out of favour. Qantas sending their last one to the Mojave Desert overnight, BA taking it completely out of their network. I think it leaves Lufthansa with the largest program of 747 flights, although I did note that if anyone's really desperate, there is a Mahan Air Boeing 747-300 still out there somewhere flying if anyone wants to take a chance. But it's it's sad, and it's just I think it's just highlights how dramatic the whole COVID event has been on the industry. And, you know, the A380 will probably see more airlines stop flying it as well.
Yeah. And Mark, any final words from you?
Not especially. I guess there was one or two questions that come in near the end there, which I think would have been good for us to spend some time on. But maybe we can answer those offline, or you know, pick up on them in the afternoon webinar. I think as much as we've talked about the future consolidation in terms of airlines, I think maybe the proliferation of code sharing and the change of airline relationships from what we've had before is also going to be accelerated. We've seen some of that in the last few years, but I think that's just going to further increase as airlines are looking for partnerships that purely add network benefit and nothing else.
Well, we have.
Yes, I saw there was a question which we haven't answered about where is this alliances, but I'm sure that's a topic we will come back to in future.
And Becca, of course, we have the JetBlue American development in the Northeast US markets, which is part of what Mark was just alluding to. So may you live in interesting times.
Yes, well, with that, we'll draw to a close. Do head over to the OAG website and have a look at the recovery tracker, which is now available. We will be taking a break in a fortnight, but we'll be back in I think 4 weeks' time, probably. You'll get an email if you're on the list, and we will be back in due course. So thank you for joining us today, and have a good few weeks.
Thank you.
Thank you. Thanks.